Hey guys, Lauren Hanks, owner of Aggressive Credit Repair for 20 years, mortgage loan originator for most of that time as well. Here we are in my newsletter that I send to thousands of people with a credit tip. In this video you're watching, I include this month's credit tip. Has to do with buying homes. These are the 8 things not to do before buying a home. Number 1, don't buy a car. People tend to leave my credit repair program with much higher scores, and they have these dreams of buying these things. Sometimes they'll buy a car before getting approved for a home loan. It is the number one worst possible thing you can do. Not only do new car loans tend to hurt your scores because you have a brand new loan, shortens your average length of open account history, and without proving any payment history, your scores tend to drop. It also raises your debt to income. That is that much house that you are now not going to be able to approve for. Okay? If your car loan is $500 a month, that is $500 less a month you're going to be able to get approved on in a house. Second thing, don't quit your job. If there's one thing that's more important than your credit scores when it comes to getting approved for a mortgage, it's your income. And you got to be able to prove that you can make it. Don't pay late. Somehow people will take their eyes off the ball a little bit right before getting approved for a home loan. They'll miss a credit card payment on a car or a credit card. Hugely impactful to your credit. I see people lose 100 points because of one 30-day late payment, and they're really hard to get removed. Don't apply for new loans. I mentioned this with the car loan. You get a brand new loan and it shortens your average length of open account history, which is your credit age. It is hugely important for having a score that eventually gets over 800. Opening new lines, for a lot of people, can compromise this, and then with things like a car loan, your scores go down anyways because you have the full balance on a brand new loan. Trust me, it's not something you want to do. Don't spend your savings. There's this notion that first-time home buyers get to have 100% financing. It's kind of true, but for the most part, the more money you have down, the more options you have for financing. Trust me, don't spend your savings. Save a small down payment. 3.5% is a good place to start. Don't co-sign for other people on loans. As you co-sign for somebody, it may as well be your own loan. That'll show up on your credit like it's your own and affect your scores negatively and increase your DTI. Don't give earnest money before a pre-approval. Sometimes when people have their hopes set to buy a new house, they'll see something they love, they'll go talk to an agent, give them earnest money, thinking that their credit's all up to snuff and that they can get approved for a loan. I've seen this happen before where their credit isn't good enough, or there's some small catch that won't allow them to get approved right away, and they can lose that earnest money. So never give money to a real estate agent for a house as a down payment or earnest money until you have a piece of paper from a mortgage company that says you've been officially pre-approved. A real pre-approval from a loan officer will include you giving that loan officer last 2 years tax returns, last 2 pay stubs, and they'll pull credit. Finally, don't overestimate what you can afford. You'd be surprised how quickly you'll realize you're house poor if you buy something that you can't afford. Buy something, start small, work your way up to the big house. Okay, those are my tips. If you have any questions about credit repair or getting a mortgage, talk to me. You can reach me on this channel or go to aggressivecreditrepair.com.